interest to you guys. Looks like we're now live streaming. Welcome to the world. Welcome to you if you're joining us on YouTube. Welcome to those flying into the Zoom session right now. Welcome if you are on Facebook or Twitter. Thanks for joining us today. We're going to have the team have a look at the markets. My name is Paul Bottrell, and I am from Actions to Wealth. I'm the founder, and we're going to have the trading team come in and talk to you about the market as we go forward. I am really looking forward to hearing the views as we start and get towards, as Gordon Scott calls it, D-Day. His prediction for the market to pull back around this time is pretty strong. So we're looking for some indications of whether we see some tops in some of these markets. We're just waiting for some of the team to come in. We've got Ainslie in at the moment. We're expecting to have the full team in just a little bit late starting following that interview with Julian McCree and Gordon Scott. If you get a chance to watch that on any of the channels, please have a look. It's been brilliant stuff. It is good to have that kind of caliber education going out to the world for free as part of what we do at Actions to Wealth. Welcome along, Ainslie. How are you?
Hi, great. Actually, I've just had my first AstraZeneca shot, so I'm feeling like I've been run over by a Mack truck, but I've just watched that interview with Gordon, and it's brilliant. You really must watch it.
Honestly,
really good.
I cannot wait to get those two together in Bali for a trading session and
have look out.
one of them on Forex and just watching them do this stuff. You know, it's interesting when you start seeing those really long-term experienced guys get at it just the way they think and what works for them, and the commonness of some of the answers were real of interest. The amount of times they agreed with each other in 45 minutes was stunning. So awesome session for that. We're going to get on with the market update today. We're without Julian for this session. The early session was recorded. He's got a family commitment at the moment, so he is away. We're going to start off with Alexis on fundamentals. So if you're looking to understand markets, understanding fundamentals is an absolute key. At the end of the day, fundamentals drive the market. They're the big picture stuff that makes a difference. Alexis, what lies ahead of us this week fundamentally?
Hi, Paul. Hi, everyone. All right. Well, as you know, fundamentals takes a while to set up. So I'm not looking at anything different. My focus is still on the China and the Aussie market because I think that is one place where opportunities are at the moment. Let me illustrate that with a screen share, and I will show you some of the data that is a bit more evident in this. So what I'm looking at now is the interest rate differentials. So that would mean looking at the China bond yields. All right, I'm going to split my screen into two here so we can do a quick comparison. And the US bond yields. All right, so this is interest rate differentials. And if you notice the interest rate differential right now, you can see that on the left, we have China, on the right, with the US. You can see the way the bond yields actually are very different. And this phenomenon sometimes occurs because capital flows are attracted to higher yielding currencies, right? So as the rate of one currency increases relative to another, investors are naturally attracted to higher yielding currency because of higher interest. So, and additionally, the cost of owning the lower yielding currency kind of increase because of the bond yield differential moves being in favor of the currency that is sold. So for example, the cost of owning the renminbi and selling the USD, will kind of cause that interest, that strength differential that we are looking at. And with the difference in the yields, think of it as money is flowing into whatever investment that gives them a higher return. So the demand for renminbi definitely favors, like if you're thinking of investing in two currencies, which currency give you the better interest rate, right? So China is, in terms of government bond yields, right, in terms of returns over a prolonged a certain period of time, but you can see even their two-year interest rate, two-year bond yield is 2.73. The US is only 0.15. So if you're just going to put your money in a currency to earn the bond yields, US will only give you a 0.15 yield, and China will give you a 2.73 yield over a 2-period time. So in view of the currency, the bond yield differentials, I also kind of look at the manufacturing PMI. All right, so manufacturing PMI for China over here, okay, and comparing it with the manufacturing PMI for the US. All right. So again, the PMI is an interesting statistic to look at. Let me just scroll down a bit. Yeah, so the PMI is interesting to look at because it's kind of a measure of the prevailing direction of economic trends in terms of manufacturing. So it's done with a monthly survey of the supply chain managers across the various industries, and the values and movements in the PMI and its components sometimes can provide a useful insight to business decision makers or even for market analysts, investors, and it's like a leading indicator of the overall economic activity in the country we're looking at. So if we just look at PMI, you can see that the last PMI figures, the US PMI has been revised lower, the China PMI has been revised higher. So in terms of just manufacturing sector or the economic trend we're looking at, China already does have kind of a favorable position. Then we have the, let me just go back to a bit of charts to look at. And okay, let me just close this. Okay, so let's look at a little bit of charts. Where is mine? Okay, so if you look at chart, again, I'm looking at USD. So you can see there is a so-called weakness in the dollar, and this spike over here towards the downside is probably because of the unemployment figures that came out last week. It was less favorable than expected. I'm going to look at CNY USD to kind of look at the directional move. So again, I'm a bit more bullish on the CNY, and my favorite tradable currency against this pair would be the Aussie dollar. You can see this is my scribbles from last week. I purposely left it on, to show the trajectory. So I'm going to delete it this week and let's draw something new. So again, like I said, I don't try to predict the direction. I'm just reading what the market is telling me and finding an opportunity to enter. So once again, we already have this move that we found last week based on China's strength, right? So Aussie will have kind of a strength in. It's already extended a little bit. What I am going to wait for next week is see whether there's any pullback and continue trading this towards the upside with one eye again on the China market. As long as CNY is strengthening, I will be a bit more long towards the Aussie dollar. I am very conscious, however, of the technical aspects of the trade as well, because the technical parts do help me avoid rushing into entries. So there is a level over here that might need a little bit of boost to break, right? So instead of rushing into it, I probably will observe next week. Next week will probably be an interesting week because it will be the week that tells me whether or not the CNY USD will do this. Okay, the CNY USD will do this, or will this lose steam, and come back and retrace from here? So this is a question mark for me next week. So next Monday, Tuesday will be an interesting period to observe the CNY, and with that, of course, the Aussie pairs in general. This will be an observation area as well, whether or not the Aussie will find the power to break and retest above this area, or will it come back down and retest this area. So this is my watch list next week, more for medium to long term, the Aussie trade with one eye on the renminbi movements as well. So that's all I have for this week, Paul.
Cheers, Alexis. Looks like some pretty good analysis last week. Your scribbles from last week seems to suggest the Aussie was going to do exactly what it did versus the US dollar. Nice work, Alexis, for those that were following that. And thank you very much for your work.